Hi there! StoneCo has recently reported the results for the fourth quarter. The total payment volume has increased. Also, the revenue, as you can see here, but the stock price has declined by over 14%. And now the market cap is about 3.1 billion and the PE ratio close to 9. And why is that? Why the stock price went down when the revenue went up almost 7%, and as you can see, the net income has increased year over year by over 34%. Why the revenue went down? You have to ask that question. And then to assess if StoneCo is still a great investment. I mean, if you can double your money. Because as you can see, for the last 5 years, the stock price has declined a lot, over or close to 90%. And they didn't issue any shares. This happened because of the decline in their growth rate. That's why you have to be very careful when you invest in this company or other companies. It all depends on their growth rate. For the moment, if StoneCo doesn't grow more in the future, they stay flat. I mean, they report a small increase. Still, at the current price, StoneCo is a good investment. I mean, if you are pleased with a return about 10% a year. But now, let's explain why the stock price has declined so much. If you look at the results, you can see that total payment volume has increased by 15% year over year and quarter over quarter by 2.3%. The highest growth rate came from Pix QR code. Then also, their active client base has increased by 20% year over year and quarter over quarter by 2.8%. For the key accounts, they continue to report those losses. But as you can see, the key accounts total payment volume is quite small compared to the entire total payment volume, which is over 128 billion. So even though this segment keeps going down, it won't affect their overall revenue. And also their banking segment is doing quite great. As you can see, their growth rate year over year is quite amazing. But what you have to be aware is the growth rate in their transaction activities. As I said at the beginning of this video, total revenue has increased by or close to 7%. But if you look deeper at the segments, you can see that their highest growth rate came from financial income, this segment. And the growth rate was over 18%. But their transaction activities, revenue from transaction activities and other services has decreased by 4.6% year over year. And quarter over quarter, another decline. This means that the growth rate has slowed down. So this is the main drag on their performance. The transaction activities, the revenue from transaction activities. And this is the most important segment. Even though you see financial income that has the highest revenue and the highest growth rate, this transaction activities is the most important. This is their network. Imagine, the more merchants use their services, the more transactions they make, and the more money StoneCo can make. When this segment goes down, or the growth rate slows down, you have a problem in the long term. In the short term, they can make money with other financial services. But this is the most important segment, in my opinion. Maybe you understand better this business, and you look at other indicators. But for me, the most important indicator is this, transaction activities. Because the more merchants they have in their network, the better they can do. They can offer their financial services, this financial income segment, and other software services, and of course, rental services for their equipment. As long as this segment is doing great, the other segments will grow along the way. But when this segment is going down, you have to know that there is a problem. with this business. Another thing that may be a problem, and I don't like it, is the increase in their take rate from 2.54% to 2.58%. Same for their key accounts. If they raise their rates only to meet their guidance, because as you probably know, they also offer guidance, then that would be a problem, a huge problem. They can do it. I mean, in the short term, they can raise their rates, make more money from financial income, financial services, and meet those guidance. But in the long term, that will be a problem for this business. Because, as I said, the most important segment or indicator is transaction activities, which is not doing that great for the moment. If this segment doesn't improve in the future, then the other segments will go down in the long term. In the short term, they will keep reporting this high growth rate. And why is this so important? These transaction activities and their take rates. Well, as you've seen, the take rates were about or over 2.5%. If the other competitors, such as PagSeguro, Mercado Libre, offer lower take rates, let's say about 2.2% or 2%, then guess what will happen with StoneCo? They will lose more merchants. The revenue from transaction activities will decrease. And in the long term, the revenue will go down. So that's why they have to be very careful. I mean, the management, how they manage this business to survive and compete efficiently. Because if they focus only in the short term to meet their guidance and increase their profits, they can do this easily. But the cost will come in the long term. So that's why the stock price has declined. Not that much, but a little, because their growth rate has slowed down. Now, next quarter, because, as you probably know, every business has ups and downs, maybe next quarter they will report a better growth rate, an improvement in their segment, especially transaction activities. When they do that, the stock price will go up. So for the moment, if you want to invest in this company, at the current market cap, you have a nice return, about 10%. And of course, if they keep competing efficiently, your return can be about 10% a year at the current stock price. If they do better, if they manage to increase their revenue from transaction activities and the other segments, especially financial income, then you can get more than 10% a year. 20%, or the stock price can double in the next 5 years from 3 billion, the market cap to go from 3 billion to 6 billion. That can happen. And as you can see, the PE ratio is close to 9%. I don't expect that the stock price may go down to $90 per share because of the competition, PagSeguro and Mercado Libre. The toughest competitor is Mercado Libre, because they not only offer financial services to merchants, but they also offer their e-commerce platform, which is the most popular in Latin America. So Mercado Libre has an advantage over StoneCo and PagSeguro. When I've looked at PagSeguro and StoneCo was a better company, in my view, and still is. Because I've seen that their take rates and the overall business was better than PagSeguro. They focused on the clients to offer low take rates, and PagSeguro had higher take rates. But what I see now is the opposite. They keep increasing their take rates. And this will be bad in the long term for their clients, because they may give up StoneCo and move on to Mercado Libre or PagSeguro if they offer lower rates. That's why you have to compare all these companies. Look at StoneCo, PagSeguro and Mercado Libre assess the most important indicators and compare which one is doing better. And then you take advantage based on the stock price, which is cheaper. As I said, for the moment, if you are pleased with a 10% a year, StoneCo is a good investment because they can easily improve this segment by lowering their take rates, do some marketing, advertising, and the revenue from this segment can increase next year. They can easily do that. Of course, in the short term, you might see another decline in this segment, but in the long term, they will attract more merchants to their services, and overall, they will do great in the long term. So, to sum up, be aware of the growth rate. It has slowed down. The stock price is fairly valued. The current market cap, as I said, you can have a 10% a year. And if they do better, your return can be much higher. So, it's up to you if you want to take advantage of this business or not. Just be aware how they operate their business in the long term. And look at the most important indicators. And if you have other questions, please let me know in the comments.